So this week in the markets during the US session, I've been back trading NASDAQ. I'm trading futures on my Top Step account, and I thought, why not make this video for you guys explaining to you the liquidity grabs that you can take advantage of when trading NASDAQ and S&P. This is something that I've just noticed a little bit more, and I found it very, very interesting, is noticing when price gets taken on the NASDAQ but not on the S&P and vice versa. Sometimes you'll see quite a lot is if you're looking for price to come and take a double top on the NASDAQ, but you don't realize it's already been taken on the S&P, the NASDAQ doesn't actually need to take it. And it's something that, stopped me out quite a lot because I'd be waiting for price to grab this double top or double bottom before the real move, and it never happened. I'd be like, hey, I was told that these are supposed to be grabbed before the move. But then you watch it on the S&P and you're like, right, it's already been grabbed there, so therefore it doesn't necessarily need to be grabbed on the S&P, and it's very, very important. So if we jump onto the charts, now I just want you guys to kind of pause this video for a second and take a look at all of these marked up highs and lows here. So as you guys can see, what I preach a lot is waiting for price to come and grab a previous level or high or low before having the real move. And if you guys can see here, look, if you're trying to take this big move down and you see this little double top, you're like, okay, cool, amazing. Once price grabs this double top, I'm going to look for this huge short back down. But what you actually notice is price never grabbed that double top. So if you're waiting for that and it doesn't happen, you go, what the fuck? You told me if price has got a double top, wait for it to be grabbed. Well, that's very true, but you actually need to be correlating the S&P and NASDAQ together whenever you're trading one or the other. Now you can decide to execute on NQ, on ES, on your Top Step account, whichever you want. I personally like to take the one that hasn't grabbed the highs because it gives me better stop loss placement. So if we look at that exact example I was just talking about, if you take a look on the bottom left of this chart where you have that double top, and you take the exact same levels on the S&P here at the bottom right, you can actually see that this double top got beautifully grabbed before then having that incredible move back down pre-market in the New York session. So exactly the same here on the bottom right, on the bottom left of the S&P, you end up having this just incredible 200-point drop. So how do you trade this? Well, for me personally, if I see it grabbed in the S&P, then I know that it doesn't necessarily have to be grabbed on NASDAQ. So as soon as we get bearish closes on the 15 or 5 minute on NASDAQ, I'm able to short that and I'm able to put my stop loss above that previous high looking for that big play down. Now, if it hadn't been grabbed on the S&P, then having my stop loss above that previous high would be stupid because that could be a liquidity grab. But because it's been grabbed on the S&P, then that gives me a valid place to put my stop loss on the NASDAQ. That's a lovely example there. And these are examples that just happened last week. I'm not showing you guys some price action that happened months ago and cherry picking some picture perfect trades. This literally happened the past 3 days. I'm just showing you guys the past 3 days where this has happened every single day, and you guys go back test this, try it out. It's very, very powerful. Exactly the same as if you're looking for this big play down for this next big move, you notice this high here and you see price grabbing it. If you actually look here in the S&P, we never came close to liquidating the exact same high that got grabbed on the NASDAQ. So this is your example right here of you could be now shorting the S&P with stops above that high because it's already been grabbed on the NASDAQ. So it gives you beautiful stop loss placement above that high. And then again, you take the exact same big move back down. Highs and lows still always get grabbed, but if you guys want to just be traded NASDAQ or ES, you have to be watching both. I cannot trade NASDAQ on my Top Step account without watching both, and this is exactly how I have my charts laid out in the US session. I got 2 charts of NASDAQ and I got 2 charts of S&P. On the top left and right, I have, I look at the hourly, the 30 and the 15, and then on the bottom, I'm typically trading this on the 5 minute for looking at 5 minute flips to follow the overall analysis of what I'm watching up here. Now, this is probably one of the best moves that I saw, which was on Thursday, where the NASDAQ had this beautiful double bottom. If you guys can see here on the bottom left, we had that beautiful double bottom, and then price wicked out that low and had that incredible move. And I unfortunately missed this move just because, there was news coming out and I hesitated. Not that I really care about news when I'm trading, because when I'm backtesting, I don't backtest and go look at the news. So I was a little bit frustrated that I missed that move. I did catch some of it, and I posted the screenshots. I'll post them here of how much we made in that session on the Top Step account. So how do you trade this liquidity grab? Well, you can trade this very simply right here on the S&P. So these are the lows. You look at the time, that's the 2:30, 9:30 a.m. New York open, where that volume kicks in. 2:30, 9:30 open, price wicks out the lows, and the NASDAQ has that big push. Price didn't wick out the lows in the S&P. Therefore, you could essentially be saying, cool, as long as the NASDAQ's grabbed the lows, I can trade the S&P with my stops below the previous low, looking for that big play up, even into that overall high. we had an incredible run. So that previous low got respected on the S&P, got grabbed on NASDAQ. I want to trade the S&P because it's going to give me better stop loss placement. You can still trade it on the NASDAQ. You could be narrowing it down to the 5 minute and you can just have stops below the liquidity grabs. That's also perfectly fine. I personally just prefer to trade the one that hasn't had the liquidity grab for the simple fact that I get better stop loss placement. That setup right there was a beautiful example. Double bottom gets liquidated, big run. Didn't have the double bottom. We actually created a new low on the S&P, had that little internal breakage structure. You retest the level, you put your stop below the previous low. Amazing, you just got a beautiful run up. So that's setups that happened on Wednesday. So there was that one there on Wednesday. You got that high there Thursday, it happened twice. Probably one of the best moves of the week, liquidating that double bottom for the real move. And then again, yesterday pre-market. So if you guys take a look, you have this high here. You see price coming very close to that previous high, that level of resistance. You think on the NASDAQ, well, I'm going to wait for that high to be liquidated before you have the real move. That never happens. You missed the big move. Why? Because it got grabbed on the S&P. So you could be taking now shorts on the NASDAQ with stops above that high. Your very nice stop loss placement. And you're playing it back down into retesting these lows or whatever your setup is. And then again, look at that. So you have that same candle. You got the 9 a.m. candle. There's 9 a.m. London time on Friday. 9 a.m. London time on Friday. Look at that. Quarter past 12. Exactly the same times. Pretty much the same setup. You get that nice strong bullish push into a doji candle. Nice strong push into a doji candle. Except this doji candle is the one that grabs the previous high before having the real move. You could essentially, like I say, be shorting the NASDAQ. S&P's grab the highs. You can either short at the liquidity grab or you wait for the flip out of that region and you put your stop loss above the previous high. Amazing. You take the play back down. That's again another 100-point move on the NASDAQ. So it doesn't happen all the time. Sometimes both of them will grab the highs. It happens. You can't control that. The best way that you can kind of manage that is waiting for price to flip out of your region. If you're grabbing highs, wait for the 5 minute to flip nice and bearish and then take the momentum out. If it comes into your level of resistance, you can see the S&P's grab the highs. Amazing. Short NASDAQ stops above, and then you could be looking for that big play down. So this is something that's very key. I know a lot of you guys are potentially, getting into trading NASDAQ. If you are, I think it's an amazing instrument to trade in the US session, but just be noting what the S&P is doing as well. You have to be watching both. It's so important. I could not trade NASDAQ without watching the S&P. I have to have that correlation. I have to know if they're in sync, and sometimes they'll be completely out of sync and you won't really know what the is going on, but that's okay. You wait for them to find their feet again, get into the same similar levels, and then just wait for whichever one to grab highs or lows before having the real move. Whichever doesn't, you take the other, you put your stop above the previous high that's already been liquidated on the other, and you catch that momentum down. So it's very simple, but it's very powerful. And I don't see many people maybe talking about it or seeing it. I know ICT teaches a lot of liquidity traps on the NASDAQ and S&P. I think he's an amazing trader at doing this. Maybe he shows us a little bit more, I'm not sure. Someone can let me know in the comments below, but this is something that I've just noticed a lot. And sometimes I would miss a lot of trades when I'm trading the NASDAQ because I'd be waiting for these grabs to happen. And then when I started watching the S&P as well, I noticed that these were getting grabbed and sometimes the NASDAQ was respecting them and vice versa. And it's massively changed my game. So I hope you guys did enjoy this quick intraday trading strategy on the NASDAQ and S&P. It's very valuable. If you guys do enjoy this strategy, let me know in the comments below. You can trade just this, very consistently. It's very powerful. So I'll let you guys go. Remember, drop a little like, subscribe, all that good stuff. I'll catch you guys in the next one. Peace.